Welcome, Investorholics and friends. Today I thought it'd be exciting to have a look at the best ASX ETFs for technology investors. So, as we all know, an exchange traded fund or ETF provides sector-specific access to technology shares that are available to trade on the ASX, just like any other share. So hopefully this video will just give you a brief overview. This is not a deep dive in any of these ETFs. If you want deeper dives, I'll include the card and you can go to the specific video that I created previously. This is just a bit of an overview video that I thought would be good for you guys to have a look at, and gives you a broad overview very quickly and hopefully add some value to your day. Hey there, Investorholic. This is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so that you can navigate the markets wherever you are. My mission here at KrackTheSky is to give you the knowledge and the confidence to take control of your personal finances, expand your investment horizons, and crack your financial sky. So don't be afraid to give me a thumbs up and also subscribe. It helps get the message out there. It helps pump the algorithm for YouTube. Just in general, it sort of gives me a bit more motivation as well to keep doing these little reviews for you guys. Thanks. Okay, so the first one here is the Beta Shares NASDAQ 100 ETF. And that one, as it kind of says, provides exposure to the largest 100 non-financial securities listed on the NASDAQ stock market by market cap. So we've had some pretty good returns since inception here of 21% per annum, which isn't too bad. The management fee is pretty reasonable at 0.48%. You get exposure to companies like Apple, Microsoft, Amazon, Alphabet, Facebook, Intel, Comcast, and Cisco Systems. So some pretty solid companies, especially those ones in the top four. I think they've got a lot more way to run. Great companies. So if you're interested in 100 of the top NASDAQ companies, that's the way to go. Okay, guys, ETFs, FANG Plus ETF. This one provides investors with exposure to the companies representative of high growth technology, advanced technology driven sectors such as consumer discretionary on the major US stock exchanges. This one has a relatively short life, less than 12 months as we're recording this video. It was launched on the 24th of January 24th of February 2020, if I can read what the hell I'm reading here. So far in the 11 months, we've seen returns of 60%, just over 60%. Pretty good management fee, 0.35% per annum. You get a small distribution, that's twice a year. This one has a similar holdings to the NDQ, which we just spoke about, but this one sort of gives you more targeted exposure to those, just the FANG names. So this one only holds 10 or 11 stocks in the portfolio, so you're going to get a lot more high concentration exposure to these top companies selected from the index. So yeah, just a little bit more concentrated way to play the getting tech exposure. So like Tesla, Amazon, Netflix, Nvidia, and Apple, so top 5, but the rest of the companies there are quite strong as well. So definitely one to look at if you're looking at just sort of specifically targeting those top performing companies. Okay, so the ETF's Morningstar Global Technology ETF focuses on exposure to global technology sector. So this is more of a broader ETF compared to the two that we've already looked at. So this one uses the Morningstar Developed Markets Technology Moat. So this one's trying to look at companies with a sustainable advantage when compared to the rest of the tech sector. So returns since inception, we're looking at 28.7%, so that's not too bad, quite healthy actually. Management fee of 0.54% per annum, and you get a dividend twice a year. Top 5 holdings here, we're looking at Arrow Electronics, Alphabet, Palo Alto, and Guidewire Software. Never really heard of Guidewire, but they must be good to be in the top 5 there. So this one covers stocks mainly from the US, but also Australia, Japan, and Germany. So yeah, looking for those stocks that are a bit more global. So if you're sort of looking for an ETF that has global exposure, or more of a global exposure, companies that are actually domiciled or located in other countries besides the US, this might give you a bit more of a flavour for that one. Worth a deeper look. Okay, so cybersecurity focus. So this is what I sort of mentioned at the start of the video, subsector of the technology. So this is the BetaShares Global Cybersecurity ETF. The code there is HACK. And this one provides exposure to leading companies in the cybersecurity sector. ETF tracks the Nasdaq Consumer Technology Association Cybersecurity Index. Pretty good returns since inception, 21% or thereabouts. Management fee is one of the higher ones. You're looking at 0.67%, and you get a dividend twice a year. This one's kind of a little bit more diversified, I suppose, not just focused on America. You've got companies here that are located in Israel, Britain, Japan, France, South Korea, and elsewhere. Top 5 holdings here, looking at Broadcom, Palo Alto, VMware, Okta, and Cisco Systems. So the top 5, they all look like they're from the US anyway, but they're all focusing on that exciting new subsector of cybersecurity. Okay, moving along. So we've got Asia-focused technology ETFs. This one is called Asia. This one is the BetaShares Asia Technology Tigers ETF. It gives you exposure to 50 of the most innovative and disruptive technology companies in Asia. So this one can be used to complement existing US-based technology allocations if you want, or just to have some exposure to Asia effectively. It's quite a fast-growing market. Pretty healthy returns since inception here, looking at 33%. Management cost is similar to the previous ETF at 0.67%. Top 5 holdings, you got Alibaba, Tencent, Taiwan Semiconductors and Manufacturing, Samsung, and Meituan Dianping, however the hell you say that. It's a bit out of my linguistic skills, but this one's definitely gives you exposure to some stocks located in mainly China, but then you've got Taiwan, South Korea, India, Hong Kong, which is China respectively, and also some of the other smaller markets. Definitely worth a look to just make sure you got some exposure to a different geographical locations, more of a focused exposure to different geographical location. Good return, so you know, worth looking at. Okay. More of a sort of a specific subsector. You're looking at AI and robotics focused ETFs here. The ETF Securities Global Robotic and Automations ETF, code there is ROBO, and that tracks the Global Robotics and Automation Index. So the index is focused on companies in the global value chain for robotics, automation, and artificial intelligence. Since inception, you had returns here of just over 19%, pretty healthy. So management fee plus cost recovery makes this ETF a bit more expensive than the others. So you're looking at sort of a bit over 0.8%, so 0.82% if I'm calculating right there. So you've got exposure to countries like the US, Japan, Germany, Taiwan, Switzerland, UK, and the rest. So top 5 holdings here include Brooks Automation, Zebra Technologies, Kronos AG, Navida Corp, and Core Young Technologies. So heard of some of them, haven't heard of others. Worth a closer look if the tech, robotics, AI type thing is your bag. Maybe not. I think maybe you can find some broader ETFs that give you similar or better returns at a cheaper price elsewhere, but I thought this one would be good to include. There's really two options for this one. The other one is RBTZ, which is BetaShares robotics. It's more specifically a robotics type ETF. But yeah, anyway, there's lots of options. So yeah, maybe not, maybe not one of my favorite ones, but anyway, there's lots of options here to choose from. So batteries and lithium, I think this is going to be a big story this year or the next 5 years even. It might be not a bad option to have a close look at. So this is the ETF Securities Battery Technology and Lithium ETF, and that one tracks the performance of the selective battery value chain index by holding all the shares that make up the index. So ACDC is a global portfolio covering multiple regions and sectors, and adopts an equal weight strategy. Very healthy return since inception. Most of that's come this year. Most of that's come 2020 into 2021. So management fee on the high side, 0.83 or 0.82%. So it's sort of higher than some of the other ones, but those what you tend to find is the more sector specific ones. The more you drill down to it, more work that the guys behind these have to do, so therefore the higher the expense. So that's something to keep take into account, I should say. So top 5 holdings here are Tesla. So this is a way to get exposure to Tesla without actually physically buying Tesla stock. And you see Tesla in a couple of these other ETFs too, higher up. Tesla, as I said, Hitachi Chemicals, Samsung, BYD, which is a big battery manufacturer in China, and Sony Corp. So they're your top 5, and it's got a pretty good smattering of other companies as well. So it's got a lot of companies from Australia. Actually, I think that top 5's changed a little bit since I did up this slide, I should say, but you got a few more miners in this mix now. So SQM, which are Chilean, Pilbara Minerals, which are Australian, and there's a few others. One from, I think, Norway, AMG. So you've got a few more miners, producers of lithium in there. So you've got your battery manufacturers, your car builders, and things like that. So you've got a good broad coverage there of the whole market. I think even though this one is expensive, it's probably one of the ones that out of this whole list I'd actually buy or have a close look at buying. So just gives you that exposure. I think this one has potential to have significant growth in the next 5 to 10 years. And it's something that most investors with a longer time frame should actually have a closer look at. Okay, let's have a look at probably one of the better or only Australian technology focused ETFs here, and this one is a BetaShares S&P ASX Australian Technology ETF. The code there is ATAC, ATEC, and that one provides exposure to the leading ASX listed companies, a range of tech related market segments such as information technology, consumer electronics, online retail, and medical technology. And this one has a relatively short lifespan as well. This one was launched on the 4th of March 2020, so less than a year, 10 months or whatever it is. Funds returned 61% over the last 10 months or whatever. So management cost isn't too bad, 0.48%, one worth looking at just for that sheer fact. Some of the top holdings here, looking at Xero, Afterpay, Computershare, REA, and NextDC. So The share price appreciation of the ETF has been driven by Zero and Afterpay, not so much Computershare. REA is always pretty strong. Next DC sort of been a bit up and down, a bit mixed, but you know, one worth a close look at if you really just want to invest in companies in Australia that sort of fit into this segment. Then it's not a bad option. If you want exposure to Afterpay or whatever, but you don't want to physically buy Afterpay, you just want to spread a bit of risk, and this is an option to be able to do that. So, you know, guys, these ETFs provide sort of instant access to a variety of global technology sort of options and companies. You know, whether you're looking to increase your technology exposure or just, you know, diversify your portfolio a bit, you know, probably one of these or two of these ETFs might not be a bad option. I know that NDQ is quite popular with the general investment public, but definitely there's a few others here that are worth a look at. One of my favourites would be ACDC, because you've got that pretty big mega trend coming up, and also your AI and your robotics type stuff. But definitely quite a few options here, and it really depends on your specific goals. I'm sure that there's, in amongst these 9 options here, there's actually something that will actually fit into your investment ethos, or you know, how you're constructing your portfolio. Anyway, guys, hopefully this was informative, added some value. As I mentioned at the start, the cards will be all through, so just click on the card if you actually want to go back to the more in-depth video on these ETFs. Drow. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. Because KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks, guys. See you later.